of the market. Then I will move to the technical side, which is my passion. And see, I always feel that technical analysis is increasing its importance because there is an increased participation from FIIs, from domestic institutions, from mutual funds, from prop traders, from arbitrageurs. A lot of participants are there. And if so many participants are there, then the importance comes to the price. And if the price is going to be more and more efficient, we have to first look for the price. Because price always tells us the action if there is a broader participation. See, there are 5 participants in the market. One is promoter, then insiders, operators, mutual funds, institutions, and then retailers. All these top 4 guys, they have their own sources of information, right? But we don't have. We don't have access to those information. But yes, if you can and if we can read the price properly, we can come to know that where the action is. And if you can come to know where the action is, you can accordingly mold your fundamental research and you can analyze the sector. You can recheck whether the trend is right or wrong. So, in brief, technicals and fundamentals both are equally important in this market right now. And if you can club these 2 tools for your investments, for your trading, I'm sure that you will make very good money in the near term, in the long run. So finally, just go through with the report, go through with this particular book. We have mentioned all the important strategies which are very simple, and you can always refer to it to anyone. That's all from my side. Thank you, audience.
I would like to request our audience, if anyone is having any queries or any questions, they are most welcome. Our guests are here to resolve your queries.
Thank you, sir. Regarding selection of stocks, if we trade on, because I am trading for last 1.5 years, I am trading only on futures and options. So by that we can take care of selection of stocks. So how do you, what is your opinion on this? Because of course there is risk also, again it will be rewarded also. In the trading on only Nifty or Bank Nifty, like that. So if we select some particular scripts,
correct,
then the movement will be comparatively less.
Right.
Say it may move in 6 months or 3 months, like that. Whereas in Nifty or Bank Nifty, it is fast moving and we can make more trade and profit also.
Absolutely.
What is your opinion, sir?
See, for future and option traders, my request is to always follow the levels. Because here you are, I mean to say, when you want to trade, you have to look for only the prices, the levels. There you cannot use your fundamentals. So, the levels are your final tool to execute your trades. If you want to trade in say like stocks, then you have to prepare your own list. And always you select high beta stocks, I mean to say in which the movement is very high, like Aban Offshore, Tata Steel, or I can say, Reliance, JSW Steel, Jindal Steel and Power. These are the stocks in which there is always action in the market. You cannot trade in say like NTPC, Power Grid, Hindustan Lever. You just avoid this kind of stocks in which the moment is not there, which are very low beta kind of stocks. For Nifty and Bank Nifty, yes, what you're saying is right, that if you can understand the trend of this particular say like future segment, you can make very good money. But for that, the strategy should be always to follow the trend. Don't be a contrarian. Try to understand where the actual range is, and as per range you can trade. So yes, what you're saying is right. You can concentrate on Nifty instead of say like concentrating on other stocks. But to trade in the Nifty, always follow the trend, is my request to you. For stop losses, it say like it depends on you, like, but always say like it's a game of probabilities. It's not the game of perfection. You have to work on the probabilities. You have to trade more and more. So you just reduce on your trades. I mean to say, come down on your number of trades, come down on your quantity, which you are trading on each say like trade. You will get a number of opportunities to trade and to make money in the market.
Usually I get a question that, from a purely from a market perspective is that, should I do an F&O, should I buy in a cash market? I think these are the two things what people ask me quite often whenever I meet customer. I have a very clear-cut view on this issue, is that F&O is a very high risk, it's a high risk game. So typically if we look at the markets today, there are two types of investors. One is that the pure investor who is looking very long term, who his livelihood is not on investing and living out of that. It is only saving for your future generations or for your financial planning needs. Second type of investors are investors who make livelihood out of markets. Okay, so you need to look at from these two perspectives pretty clearly. Second is that what is the level of risk you would like to take. For example, if you have 100 rupees and you have only 100 rupees and you want to do all the trades 100 rupees through F&O, my answer will always be no, because I think you have learned the lessons of derivatives, what happened globally. I think there are issues because it's a high risk trades, because people lose a lot of money on them. I sincerely say that if you are a pure retail investor and you are looking for a long term wealth creation, I usually avoid investors not to do our F&O trade. So this is my view in terms of the overall thing. But if the investor says that I want to do a livelihood of that and I would like to do a high risk trade and have a substantial money, I've planned myself well, I think you can do that. But broadly speaking, we as a Kotak Securities as a firm, we are very clear that retail investors should not participate in F&O trades if you are long-term retail investors. That's my...
One more thing that here we have to highlight is that if you have your own analysis, your own knowledge about the market, it is always good, because the exit is always important in the market. If you can use your own knowledge, it's very good. But if you don't have your own analysis, then you can follow any one analyst or two analysts, not more than two analysts. Otherwise you will get confused in the market. So either you possess your own research or follow anyone's research, and see, you will get a very fantastic returns and result. Any more questions?
Thanks. Does your book have a chapter on how not to panic, no matter if you're sure of your stocks? Because most of the Indian markets, the investors are very emotional driven. And you see all channels will panic you in 10 minutes saying, oh God, it's 100 point down. It's okay, by evening it covers up. But at that moment of time, the normal investor who hears bad, do you have a chapter on that, on how not to panic? Trust your judgment, kind of.
Yeah, say we have not introduced this because we have given the simple principles. See, if you follow the simple principles, the principles always tells you that the market is simple. What I mean to say is that, say like if you are long in any particular stock, okay, and if any bad reason comes, say for example Emphasis BFL, okay, when they have broken their ethics of reporting the wrong numbers in the last quarters, whenever such kind of news comes, or maybe Satyam, whenever such kind of news comes, it is mandatory for you to exit out of the that particular investment or trading idea. Why? Because see, no one is going to help you in that. Instead of listening to channels, see, because they are always going to give their own opinions. Finally, it is your money. So you should be always clear with your exit points. And that we have mentioned in our book, that first be clear with your exit points and then you enter in the market. So then there is no need of panicking. If the exit point is there, if say stock is trading below that exit point, we have to exit. No need to panic. And see, panic and all these things are always appears because of, as you said, because of the crowd that we listen to. But it is, instead of that, be prepared yourself or follow anyone and then you just enter. If that particular person is saying exit, then exit. Then you cannot wait. Then you cannot use your discretion. But if you have your own knowledge, fine, you can take your call.
See, there is actually a subject called investor psychology. Okay, what we try to do is that there's a flavor of investor psychology in this. That first, why does the market behave the way it behaves? Its just reason is because the first question is, it is panic. Okay, that's where it starts. Okay, so you find a lot of market volatility because of panic, right? This news channels always says, oh, panic buying or panic selling, right? The panic is a cause of most of the volatility, apart from your corporate results or anything. And that is also a function of panic. So what we attempted to do in this book is very clearly is that it attempts to give basics of equities. It demystifies lot of jargons what your 5 channels does it day in, day out. Shrikant also appears quite often in all the channels. So what I'm saying is that, so we try to do a lot of things in the book in terms of demystifying the truth. One more important thing what we have put in this book is a financial planning chapter, which is also very important. For example, you have 100 rupees today. I suggest not to put all 100 rupees in your equities. You need to do a asset allocation right. So it's given a basic principle of that. And obviously, if you are a Kotak Securities customer, you can always approach a relationship manager. They'll help you out in terms of financial planning. So my view is that panic is a cause of markets which comes ups and down, right? Volatility is because of panic. Whether the company results are bad or there is an earthquake in Japan, people just don't wait for the end result. The immediate reaction is panic. So panic sometimes gives opportunity for people to buy, and most of the time people don't buy on that panic, which is negative panic. People always buy on a positive panic. So that's where I'd like to tell you that we have attempted something on investment psychology in this, but it's pure basics now. It's a huge subject. It's a huge subject.
See, one more thing that again I want to highlight here is that just now that we have mentioned that you always follow any one analyst or any one person. You can see always 2 top personalities on the screen. One is Rakesh Jhunjhunwala and other one is anyone can guess? Shankar Sharma, right? See, if like you want to use the opinion or trade or invest as per the suggestions or the opinions that you get from the channels, you have to want anyone, you have to follow anyone. If you are following say like Rakesh Jhunjhunwala, then even if the market is coming down to the extreme levels, you have to listen to him only. And if he's confident that if he's saying, okay, it's a long bull run, just sit on it tightly, you have to sit on. You have to sit on that your investments tightly. But if you are following Shankar Sharma, then you have to follow him even if the market goes to 22,000. What he's saying. And then only you will get a positive result. If you follow him at the top, I mean to say if you follow Rakesh Jhunjhunwala at the top and if you sell your investments on the basis of the opinions of Shankar Sharma, then you will end up with making huge losses. I think it's a very clear that, I think it's very clear for you that how we can look at the market and how we can use the sources that we are, opinions that we are getting from the channels.
You said that there is a high level of knowledge in Kotak, and that is one of the reasons you have been there for the last 8 years. But as a client of Kotak, what is the benefit of being a client of Kotak? It is just a post office as far as I am concerned. I was dealing with another company. They said that Kotak is better, you shift here. But I think it is nothing more than a post office. Just we say buy this, they will buy. If you ask them to sell this, it will sell. So what is the use of all your knowledge and everything that you are saying is of no benefit to a client.
Sir, like here we mentioned right now that the market is simple and we have to follow the simple strategies, number one. Number two, that here we cannot feed, I mean to say we cannot use the spoon feeding kind of approach. We have to use our own knowledge, that how we have to be in the market, what should be the patience levels in the market, and that is all we discussed in this book. If you are say like the client of Kotak, it's good. What you will get the number of calls, because we are here to provide the service of each and every class, each and every segment of the market. We don't know that who is investor, who is trader, but we are giving calls as per the measurement. Like in case the market is falling, we have to look for the investment calls. In case the market is trending, we tries to give more and more trading calls. So in that process, the investors and traders, they have to use that which call is applicable for them, and accordingly they can go for it. If you are say like the quota of client, my sincere request is to just prepare your own basket and just take out the information which we are giving about that basket. If you are say like not enough or not in the capacity to prepare your own basket, you follow the top 5 stocks of the Nifty, or you can speak to the nearest like you are in a branch, you just ask him that please I want to speak with the analyst, or I want to chat with that particular guy. I'm sure that if you go for this particular kind of strategy, you will start understanding, or you will get the lot of repo understanding between the analyst and the investors.
No, I think that Kotak should try to have more interaction with the client. Don't leave us to our own fate. There should be some kind of interaction between Kotak people and the clients, at least once in 3 months or once in 4 months. I don't think a single Kotak person has called me to ask me how is the service that we are providing. Do you require anything? Do you require any changes in all the information that you are giving to us? Even in the internet, the information that comes from Kotak, what more we need, what we don't need. I don't think anybody is contacting customers for anything. We just become your members, and then the post office starts. I tell you to buy, you buy. I ask you to sell, you sell. So whether it is Kotak or Angel, everything is same for us. What is the benefit of coming to Kotak? There should be some quality in your service that you are providing. Even if you give some scripts, then there should be some analysis. Why you are asking us to choose this script? What is the future of this script? What is the profit? What is the dividend? Why you have chosen this script? If it goes into loss, we are not immature to blame you for that. But at least some basic information is not there at all.